Good morning and good afternoon and a good day and a good week to everybody who's with us right now. Welcome everybody to yet another webinar of our FX Educast webinar series. I am your host Munther Marji, and I will be taking you for a trip for 3 hours today, looking for the best opportunities to trade in the market today. It is Monday, so I hope everybody had a wonderful weekend and that you enjoyed your time, enjoyed the results that we achieved last week. Very good results, especially towards the end of the week with the yen and the dollar and with the euro against the dollar as well. We had good results. We had good recommendations, the last of which was the buy dollar yen, I remember from Friday, which achieved a little bit of profit, around 25 pips by the close of the week. So today, of course, we are going to continue doing what we were doing all last week, hoping to get the same kind of results or even better than that. So that's why I really hope that you guys have the post-weekend energy so we can start right away. Of course, this webinar is sponsored by QTime FX, our favorite forex broker, who is offering you fantastic spreads, and you can see that on the screen. They are amazing. Only 0.4 of a pip on the euro dollar and the dollar yen with 0 commissions. And to top that, we are offering you guys a bonus of $500, not just credit to trade with, but a bonus of real money that you can withdraw. If you are interested, please contact us at FX_Educast via Telegram, and let's open this account for you. Okay guys, so ready? If you are ready, let's hit the charts. I hope you are. So let's hit the charts, guys. As usual, first thing that we are going to talk about is the euro. I know you guys love the euro. Everybody all the time asks me about the euro. And welcome to everybody who's watching. I hope you will have the fantastic time that you came here to have. Of course, with what? With results. So let's start with the euro, guys. And although we had a very busy week on the agenda last week, the euro did not break major levels. We had the Fed, of course, on Wednesday, and then we had the jobs report on Friday, two really huge events happening less than 48 hours away from each other. And even with this kind of huge events that we were waiting for, everybody was looking towards having some information, more information about the direction of the next move in the market. But even with the Fed and the jobs report, as you can see, guys, the euro continued to trade in the areas it did the week before that. So we did not have any major breaks. We did not break above 1183, the 2-month high seen on October 18th. And we did not break below our beloved and favorite support area, 1063. Sorry about that, guys. 1063 to, remember this area? It was 1063 to 1086. Do you remember that, guys? Do you remember this area? We talked about it a lot, right? Remember that? We talked about it. We said that it's an important area. It was built between two support levels, or actually 3 support levels. It was made of 3 support levels. All of them were retracement levels. And not only that, of course, with these retracement levels, what proved that these retracement levels are very important was the daily lows that we saw day after day in that area, and I'm going to show you all of that. But the bottom line is that we had a fantastically strong support area, even with the Fed. You know, during the commotion that usually happens when the decision comes out, sometimes the price moves to the upside, then to the downside in a sharp way, or the other way around, of course. Even with that kind of commotion, the price was unable to break below this support area. And to me personally, that by itself proves how important it is. But not only that, of course, we have a number of daily lows that we can use as confirmation of the importance of this area. And I'm going to show you on the chart. Okay guys, so this is our area, and it's going to continue to be our support for the time being. We're not letting it out of our sight for 1 minute, okay? Although we are trading well above it at the moment, of course, it is still important and we should pay attention to it. And of course, we can drop towards it at any time. So let me show you how many days had their lows inside this area. The first one was October 17th, when we had a daily low of 1063, and the price started rising or continued rising from there, resumed the correction, or maybe new trend, who knows. It was a recovery attempt in all cases, and then we dropped again to this area. We found on October 25th, we found the low of 71. On the 27th, also it is exactly 71. And on the 29th, it is 72. And this candle with the long lower shadow, this is the Fed candle. This is what happened when the Fed announced the rate cut. And as you can see, the low is 1079. So all of these daily lows, 1, 2, 3, 4, 5, are inside this area. So it's a retracement area, a confluence of retracement levels, 3 retracement levels there, very close to each other, 63, 67, and 86. And the price is obviously respecting this support area. So we're not going to change our mind that this is the most important support area for now. On the contrary, everything that happened last week proves that this is the area that we should pay attention to. Okay, guys, so this is for the support, of course. What about the resistance? We are still believing that we need to break above October 18th high, which was 1183. And as I said in previous sessions, there's a problem with this high because it happened right at the final moments of that week, just before the market closed for the weekend. And that is why it did not appear on the screens of all brokers, all charting services. There was differences between the high from one broker to another. But of course, we are talking about pips, 10 pips or so between, for example, my broker and my charting software or charting service that I use. Nevertheless, we are going to use the ICE high. And that, of course, is the main exchange for currencies in the world, and that is 1183. So 1183 is going to be our resistance for one more day, and as you can see, of course, we are extremely close to it. We are trading currently around 15 pips below that 2-month high. So any push above 1183 means that we are going to trade at a 3-month high for the single currency. And this is what we need, of course. Under the current technical outlook that we really believe in, we believe that the euro has a great chance of recovering on the long term. But of course, we need to see evidence of that. Up until now, it is trying. The bulls are trying. The euro is trying, but we need to see more because we are currently trading above the top of the wedge formation. This black trend line, as you can see, of course, it starts with the high for 2018 and touches other important and significant tops. The one seen in March, the one seen in April of 2018, and then we had a period of not touching this trend line up until this summer when June top, probably one of the most significant tops for 2019, was touched by this trend line, or it touched the trend line. And after that, of course, we tried to break above it. We failed the first time, and the second time we are trading above this trend line. And remember, guys, what I said before. Remember, we said that the second attempt to break an important level is usually stronger than the first. And that's why we really expect the euro, after this failed attempt here, it tried, it closed above the trend line, but we dropped again to trade below it. Now we are above it, and we need to show strength. That's the first thing that we need to show. The first sign of strength that we really need to happen now is to trade above October 18th 2-month high. That is why 1183 is very important now. So keep your eyes on that. Now, although this trend line, this blue trend line, does not make any kind of sense. No, it does make it does make sense, but I mean, it does not show the qualities that should be there in a good trend line, because it only touched twice, and after that it's not touched at all for more than a year. So I don't know if we can count on it, but if we draw the trend line from the 2018 yearly high and try to be exact in drawing it to touch the March high of that year, we will have ourselves a trend line that is still above the price action that we are seeing these days. So if we draw this trend line, we're still below this trend line. Where is the trend line currently? It is extremely close to August top, which was 1250. Okay, so that means that even with breaking above 1183, to feel very good about this break, we need to see the price moving above 1250. Okay, so that means that the initial resistance is at 1183, and in all cases, of course, we have 1209. We talked about that last week. It's a Fibonacci level, but we need the price to break above 1150. 1250. Okay. So for now, what kind of orders can we place? What kind of recommendations can I give you for the day? Well, in my own opinion, breaking above 1183 is a good reason to buy the euro. We need to see the price breaking above 1183, and that by itself, under the current technical outlook, is a good enough reason to buy the euro. So if you see the price above 1183, I believe you can initiate a long position, but of course you need to take care of the risk management, because this is it's going to be a 3-month high if we trade above 1183, and that of course can have some kind of risk, because the price can retreat after reaching highs that were not seen for a period of time. So of course we're going to specify what kind of stop level we need to use on this Okay, guys, so uh, what kind of stop can we use for this? One of the stop levels that we can use is below the rising trend line from October 29th low. And when I draw this trend line, I neglect the long shadow that we saw when the Fed gave its decision. So with that, this trend line is currently running around 40. And you remember from last week, we talked a lot about 1136 as a retracement level for the last part of the corrective attempt. And as you can see, we had Thursday and Friday lows. Very close to that, to the 30s. So in the 30s, we found support, and of course, these retracement levels are very close to each other. So you can also use this, which is 27, which is also close to the 30s, very close. As you can see, this is very accurate here. It's the 50% level of the drop, sorry, of the recovery from the Fed low to the highest price seen after that. And one very interesting observation that I have for you is that this this looks like a lot like a flat correction. Of course, ideally, if you want to be technical about your elliott wave counts, usually the top of B wave goes above the previous top, but of course it's not a rule. It is something that happens a lot of time, but not all of the time. And as you can see, we have three waves, corrective sideways price movement that terminated very close, or maybe exactly at the 50% retracement level for the previous move. And this, of course, indicates the end of a correction. So if we are right about this, then the chances of reaching a 3-month high are extremely, extremely good. And we need to start thinking about where are we going to go when we are moving higher. And for this, I need a longer term chart. As you can see, the 50% level of the last leg of drop, which came, of course, which took us down from the top seen in June to the bottom seen, the 29-month bottom seen on the first day of last month. The retracement levels for this move can be very helpful in estimating what levels are we going to reach. The 50% level is at 1146, and of course we are already trading above that, so we switch to the next one, and it is 1209. Of course, this is 61.8 level. Guys, this is the most important Fibonacci number, the Fibonacci retracement. If you are using Fibonacci retracements, you know that there is no number as important as 61.8. But there's a problem here with this level, and that is if we break above 1183, the distance between 1183 and 1209 is what? 26 pips. So can we break above a resistance like 1183, which has been holding us down for 3 weeks, and then expect a move of 20 pips? I don't think so. So it is expected that we can overcome this resistance. And if that happens, that would be fantastic for the bulls. Above here, of course, we do have an area that held the price down for a number of days back in August. The highest price in this area is, of course, 1250. We already talked about that. But we do have levels that are a little bit below that, 42, 1242, 1233, 1223, 1231, and 1229. So between the 20s and 50, we do have an obvious resistance here, guys. As you can see, This is the area I'm talking about. I'm going to delete everything, and I want you to see this area. Okay. As you can see, it was creating all sorts of problems for the bulls when they tried to recover at the beginning of August. But of course, this area survived and pushed the price lower. Now, breaking this area on the way up would be fantastic for the bulls. Actually, super fantastic in my opinion. And it could be the catalyst that we need in order to see serious gains for the euro. Up until now, of course, we had a wonderful October, and the euro was achieving gains every week there, almost every week. And by the end of the week, we were trading almost 300 pips above the low that we saw on the first day of that month. And that is good, that's great. But you know, this thing can accelerate and we can achieve more gains if we overcome this area. This is my own opinion. And of course, even with such great areas that we really like and believe in the strength of, we need to keep our eyes on retracement levels. So I'm going to keep my eye on these retracement levels, which are above this area, the first of which is 1260. Of course, 60 and 50 are very close to each other at the top of this area, and the next retracement level are extremely close to each other. So what we should do here is to treat them as one area, okay? The 50 and the 60 both are one resistance, because we only have 10 pips between them. Above that we have 1289, and above that we have 1351. These are the 78.6 and 88.6 harmonic ratios. Anybody use harmonics here, guys? Let me know. I'm gonna get to your comments immediately after we finish the euro. Of course, we have some comments. Welcome everybody, very glad to have you all here. And once we are done with the euro, I'm going to talk to you one by one. Okay, so these are the expectations now, of course. Let me summarize for you what is the bullish possibility, and then we'll talk about the bearish possibility. The bullish possibility is if we break above 1183, we should start rising. And one of the very important resistance areas in this area is between 1220s. We have a resistance at 1209, but we really believe that we can overcome that without a lot of problems. I hope the market shows that we are right about this one, because 1209 is an important resistance. But from where I stand here, the bulls should be able to overcome that important resistance. Above that, we have an important resistance area in the 1220s to 1250, and 10 pips above that, we have an important retracement level. So 1250 is the top of that area, 1260 that retracement level. I want to see the bulls push beyond 1250 and not stop at the 60, of course. So it will be a double break if they can do that. A break of 1250 and 1260 at the same time. That would be fantastic for the bullish scenario. Above that, we do have retracement levels, harmonic retracement levels that we need to care about at 1298 and 1351. Another bullish possibility is, of course, dropping back to the 30s, the same area that saved the euro on Thursday and then again on Friday. The daily lows for Thursday and Friday are 30 and 27, only 3 pips between them. So that shows you that the 30s is an important support. And in my own opinion, dropping to 30s is yet another chance to go long on the euro. So if you want to go, if you are looking to buy the euro today, what I want you to do is to wait for a break of 1183, and that is a buy signal, or wait for the euro to drop to the 1130s, and that is also a buy signal. So in both cases, I recommend buying the euro. Today, I do not recommend a short position, to tell you the truth, unless something huge really happens, and that is a break of our very important support area, 1063 to 1086. Now, what about the stop levels? What about the stop levels? If we initiate a position on the break above 1183, our stop should be below the 30s, below the daily lows for Thursday and Friday. Okay, guys? But if we are lucky to get a long position in the 1130s, then we can place our stop just below the important support area that we have been talking about for 2 weeks now. We really believe in the importance of this area, and it really proved itself all last week, which of course proved that we were right about believing in it, and that is why our stop should be below this area. We should not place stop levels that are above this area, if we can, of course. I mean, risk management is very important. It's not also always only technical analysis, but also risk management. So let me go to my trading platform and let me place my orders. Okay. So the first order is a buy stop. We are waiting for the price to penetrate 1183. 10 pips are enough. In my own opinion, even 5 are enough, so I'm going to place it at 1188. My stop should be below the 30s. The Friday low was 1127, so I'm going to place my stop 20 pips above that, 1107. Okay, and my limit is 1250, 1260, something like that. What do you think about it, guys? I'm going to be a little bit greedy, because if we break above the 2-month high, I expect some kind of good movements, and the next level, one of the harmonic retracements, was 1298, and that is where I'm going to place my limit. So this is the first order for today, guys. Okay, buy euro at 1188, stop 1107, limit 1298. And of course, tomorrow we're going, if it got hit, if we are in the market tomorrow, we will check what happens to it. If it reaches the stop or the limit, that's it. If it does not, we need to close it the next morning, because you know these trades are not very long term. We close them on a day-to-day basis, and after that we look to initiate more entry orders, more positions. So as you can see, guys, 1188 is my long, 1107 is my stop, 1298 is my limit, and place. Order placed. Okay. Now what if I see the euro in the 30s? In the 30s, that supported the euro on Thursday and Friday again. Well, that, in my own opinion, is a reason to buy. Thursday's low was 1130. Friday's low was 1127. Obviously, we have something in that area, and as you saw, it is the 50% level for the recovery from the Fed low, exactly at 27. But I'm going to place my order at 30, which is the highest between these two daily lows. And my stop, of course, needs to be below the bottom of the key support area that we were talking about all this time. To remind you, it is 1063 to 1086. That means that we need to place our stop below 1063. Below 1063, what, maybe 20 pips. That, in my own opinion, that is enough. So 1043. And my take profit now. Of course, we can think of the same take profit or same limit as we placed on the order just before this one at 1298. We also have 1250 to 1260 to think about. So I'm going to place it at 1298. But what I want you to do, and place, yes. What I want you to do, guys, is that if you are following my long euro recommendations for today, if in case things are going great for us and we reach 1250 or approach 1250, we show some kind of weakness around 1250, 1260. These levels are providing us with some resistance that we obviously are unable to overcome. That's it, guys. Close your position. Okay, don't wait for 1298. But if we penetrate through 1250 and 1260 and we start trading above them at 65, 70, that means that 1298, of course, it will be extremely close at that point, and we can wait for that limit. So I want you to decide what to do at 1250 to 60. If we only reach there, unable to break it, then close your position. And of course, by then, if it's a buy at 1188 or at 1130, in both cases, when we reach 1250, you will be swimming in profit. Okay, so there's nothing that you need to worry about. We can, of course, close our positions if the price gets there with a great profit without even having a very strong emotional factors that affect our decision making. So that is great. We are done with the euro. We have our retracement levels calculated, our resistance, our support. Now we know all the important numbers for today, and we already placed our orders. But let me change the chart for the euro because we're talking about the euro. So as you can see, we have a buy here, a buy here, and a buy here. Okay, and we have the stops, and here is our limit. Let's hope for that. Keep your fingers crossed, guys, and hopefully 24 hours from now we will be talking about the limit being hit. Although usually on Monday it's not a very exciting market, but who knows? Who knows, right? Okay, guys, so we are done with the euro. I'm not gonna place a short order, but I'm gonna talk about it. What justifies a short position? I'm not gonna place it. I'm repeating this. I'm not placing orders to short the euro. Under the current technical outlook, I prefer to be either flat, no positions, or on the long side of the market, having a long position, having a buy. But I'm not really looking forward to shorting the euro at this moment. Maybe this can change, of course, if we have bearish breaks, strong bearish breaks. Of course, I'm going to follow the breaks, but at the moment there is no reason to do so, in my own opinion, of course. So, if you insist, if you really want a short signal, I'm not going to place this order again, but we can sell if the price breaks this area, this important support area. And that happens at 1043. That's 20 pips below the bottom of this area, which is, of course, the stop for our long position in the 1130s. And we need to keep the stop limited here because it's a risky position in my own opinion when you short the euro. And now that we are trading above the top of the wedge formation, it is risky. So I don't want to risk 90 pips or 80 pips like I do with a long position that I really believe in. But just going back above the top of this area is enough in my own opinion. It is the top of this area is 86. So maybe 10 pips above that at 96. 1096, that leaves our stop at 53 pips. Yeah, it makes sense. And what about the limit? Of course, if we break this area, it's a strong, important area, we can think about dropping at least to these areas around the bottom that the last leg to the upside started from. And this is 989. But we have a retracement level here that we talked about last week, which is the 995. I think it's 61.8. Yes, it is the 995. And as you can see here in this, let me magnify this for you. Here around this 995, we have daily lows here, 1, 2, 3, 4 obvious daily highs, sorry, 5 daily highs, and here we have a daily low very close to it. So it is really obvious that 109.95 is a major support. So if we sell the euro at 10.43, as you can see, the limit is not that much. In my own opinion, you should not think of levels below 109.95, and that leaves us with what? 48 pips of profit. This is not my recommendation for today, but I always, of course, represent the view of both parties, so both sides of the aisle. So if you want to sell the euro, I really recommend not doing this around current levels. And if you do, please use, maybe you have something that you see on the chart that you believe is going to push the euro to the downside. If you have that kind of situation with the euro, it's okay, you can sell, you can do whatever you want in the market, as long as what? If you were here in my previous webinars, you know my review, you can do whatever you want in the market. You can flip a coin, okay, and decide to go long or short upon that flip of the coin, but use good risk management. This is how much I believe that risk management is this thing that separates winners from losers in this market. Do whatever you want if you use good risk management. Who knows? It's a market. It can go in any direction. So you may be right, even if the chart is pointing to the upside, sometimes the price moves to the downside, of course, and maybe you can get that right. Although, of course, I don't recommend you doing this, but even if you want to do this with a good risk management, with not risking a lot of your account, it's okay, you have my blessings. Okay, guys. So we placed our orders, we talked about the bearish possibility, and now I want to turn to your comments. Okay, Simple Woman blog. I really don't understand how to do it. Well, I'm here to help. You just tell me what is it that you need to understand, and I'm gonna explain it to you in the best way possible. But let me know what is it that you do not understand, because I don't know what you do not understand. Not a lot of information in that comment. It's a very short comment. Ethan is here to help. Thank you, Ethan. Victor is asking about the withdrawal from his account. I really hope that you are having fantastic trading results, Victor. And if I helped in any way, I would be extremely happy. And if you did it on your own, kudos to you. Congratulations, buddy. And another question. Could you teach me how to trade? Well, what we are doing here can give you a lot of information. This is not an educational webinar, of course. As you can see, this is a live analysis and trading session. But nevertheless, you can catch bits and pieces of the tools and the methods that I use in analyzing the market and deciding on where to go long, where to go short, and why we go long, why we go short. So if you follow these webinars, Victor, I promise you that you will catch at least bits and pieces of the tools that you need to analyze the market in the right way. But of course, this is not an educational webinar. We have educational webinars on our channel. Please go back to them, check them out. I have a number of very, very good educational webinars there that can give you a lot of information on how to use everything from moving averages to RSI to trend lines to retracement levels. I have a lot of educational webinars on FX Educast channel on YouTube. So please check that out. And if there's anything I can help with, you can find me on LinkedIn and Facebook. If you have a question about how to use these things, how to use these tools, the technical tools that I really, really love, please contact me via LinkedIn or Facebook, and I will be there to answer your questions. When I can, of course. I'm not a free man. I don't have that kind of schedule where I can do whatever I want anytime. So when I can, of course, if anybody needs help, I will be glad to help. We're glad to give you answers. Okay? Ethan is also capable of teaching you how to trade, of course. Jennifer, you're going to try this. I assume that you are talking about the orders that we have placed. If you have a real account or a demo account, you can just follow the orders as I give them to you. I don't make this very hard for you guys because we have beginners. Of course, I realize that we also have people who understand the market in a good way. They are not beginners, but of course we also need to make it as clear as possible for people who are joining this business right now, people who are trading for the first day or the first week or the first month. They need our help. So that's why I try to keep things as simple as possible. Jennifer, if you have a demo account, if you are new to this, or a real account, in both cases, you can start following the recommendations that I give to you. You can place the orders exactly as I give them to you. I give you the entry level, the stop, and the limit. And that's it. All you need to do is to take these numbers and place them on your account and see what happens in the next 24 hours. Some of them, of course, are going to generate profit. Some of them, of course, are going to generate loss. And we really hope that the total is going to make you satisfied. One thing I need to say to Jennifer and Victor and to everybody who is with us is that you need to focus on risk management. If you are new to this thing, I'm sure that you will mess up your risk management. This is something that all beginners do. There's no way around it unless you have someone to guide you through the beginning, because the beginning is very hard. You are entering a jungle that you know nothing about, and you think it's easy. A lot of people come into the market thinking that money grows on trees, but it does not. It needs a lot of hard work in able to achieve profit in this market. It's not something that anybody can do. In fact, around 80% of all traders lose money trading Forex and CFDs, and only around 20% do not have to go through that suffering. So in order to be among the 20%, what you need to do is you need to work very hard. You need to learn. You need to educate yourself. You need to find someone who is experienced to help you avoid the mistakes that the beginners do. And you need to continue on doing so. You read books, you attend webinars like this, you go to FX Educast YouTube channel and you watch the educational webinars, the great educational webinars that we have for you. And then you start to understand how this thing goes. But don't expect to be super successful from the first day. Of course, nobody is. Even I can think of a lot of people, a lot of legends that had a rough start. For example, Michael Marcus, one of the most legendary traders in the history of the world, started with losing all his money. But he did not give up. He came back. He said to himself, well, I'm going to try this again. I'm going to learn this the right way. And fortunately for him, he met someone called Ed Secoda, who is a real legend, and he taught him how to be a successful person. Jesse Livermore. To a lot of people, Jesse Livermore is not a human being. He's a demigod. He's the kind of trader that comes maybe once in a century or maybe 2 centuries. Okay, Jesse Livermore is, to a lot of people, the greatest trader who ever lived. Okay, and as well, he lost all his money on the first attempt, but he did not give up. He came back, he educated himself, he found the right method to trade the market, and then he started making millions upon millions of dollars. Okay, so with this, guys, I'm very glad that you are here. Stay with us for the next hour. Of course, we're going to take a break of 5 minutes or so. During this break, please, if you have any requests, shoot, and I'm gonna go through them. If you need me to analyze any instrument, I'm gonna be there. I'm gonna analyze them for you, and I am going to give you the best technical levels that you need to care about and on any instrument that you are interested in. And of course, for the major instruments that everybody cares about, we are going to provide you with trading recommendations for each and every one of them. So it's a break, guys. This is our first break for the day, first break for the week. And it's an opportunity for me to remind you that this free webinar is sponsored by QTime FX with fantastic spreads, zero commission, and a very generous bonus. So if you want to implement the ideas that we talk about in everyday webinar, then what you need to do is to contact us at fx_educast via Telegram. Open your real account. I don't care if it's $1 million or $1,000, but in my own opinion, guys, you need to trade real money to learn the market. Trading demo for a while is great. That's a step that I highly recommend, but you do not feel the real pressure of real money trading by trading the demo. Of course, you can leave your positions and say to yourself, well, it's okay, what? So if I lose everything, I'm going to open another demo account. This is not real money. So you don't feel the pressure of making decisions under real risk, the risk of losing your own hard-earned money. And that is why I really recommend, if you are serious about this business, open your account with a small amount, $1,000 for example, or maybe some people prefer to go even lower than that. It depends, it really depends on you and what you have in your mind for investment, what the kind of capital that you need to invest. Don't put it all on the first attempt. Just like Jesse Livermore and Michael Marcus, we were talking about them right now. They, lost everything on the first attempt, but they were smart enough not to put everything they have on the first attempt. So they had money to come back again after they have learned the market. So as a beginner, I really recommend opening a real account with a small amount of money, not a demo account. Try the demo account for a week or two, or that's it. I don't believe you need to trade demo more than 2 weeks, because after you get the hold of it, there's nothing new, when you trade your demo account. But when you start trading real money, even if it's a small amount, that is a totally different story. That's why I really recommend, guys, that you open your account and start trading and follow these trading recommendations that we give to you on a day-to-day basis. So come on, contact us at fx_ via Educast via Telegram, or of course we have Skype as well, and we have our YouTube channel, Facebook page. So we are there if you need anything, you need any help in opening your account. And if you do, we are giving away $500 bonus for new accounts, and we are giving you the opportunity to trade with such unbelievable spreads, which will make it easier for you to achieve profit with the smallest moves in the market. So with this, guys, thank you very much for being with us here for the first hour. Okay, as Ethan says here, he opened a real account and he got the $500. Of course you're going to get the $500 bonus, because this is an offer that we are giving away to everybody who open accounts with us. So come on, guys, Let's do this and see you after the break. I'm going to take a 5 minute, maybe 6, maybe 7, something like that, of a break, and I'm coming back after that to answer all the requests that you have. Stay with us, guys. See you in 5. Hello again, guys. Welcome back to this ongoing webinar. I'm your host, Munther Marji, CMT, and I'm going to be taking you on a trip for 2 hours now. We have been together for 1 hour so far. Now we still have 2 hours to go. And during the first hour, we talked about the euro in great details. We placed 2 orders to get in the market on the long side of the market. We wanted to buy the euro. We said that above 11.83 it is viable, and if it drops to the 30s, 11.30, it is also viable. And in both cases, what we need to do is, of course, to take good risk management, because anything can happen. We really believe in the upside, but anything can happen. We have our stop orders ready if things start to move against our expectations, and we have good limits waiting for us. And everything, of course, we give you all the details, so please go back to the first hour if you want to follow the euro recommendations for today, and you will find them, of course, in the first hour of this webinar. Thank you very much, QTime FX, for sponsoring our webinar for one more day and one more week. It's because of the generous sponsorship of QTime FX that you guys are receiving all this free analysis. Of course, this is not free. You know that. I'm sure people who have been in the market for a while know that these things are not free, and they can never be free unless you have a generous sponsor like QTime FX, our favorite forex broker, sponsoring it in order to give this information to potential traders and live account traders and people who are just interested in the subject, so they can go on with trading with the help of the analysis that we are providing you with, hoping that this analysis will help you achieve good profit in your trading, good results. So, without any delays, guys, let us go to the chart again. Let me open my charting. Okay. As you can see, the euro is trying to rise, but it's only pips. We left it around in the 60s. Now it's in the early 70s and the lower 70s. So not a lot of movement, but it is trying, and we need to break above 83 in order to open the way higher. Now, how about we talk about gold? And gold, this is something that we talked about a lot recently, but I think on Friday we did not. This is from the last analysis that we did. It's still there on the chart last week. There is a high probability that this is a correction. The drop from the top seen early in September is a 3-wave corrective move, and that, of course, is indicated by breaking above the moving average and the falling trend line from October 5th daily high. We had an attempt to break above both here, but it failed. And the failure, of course, pushed the price lower. But once the Fed announced that, yeah, we are cutting rates for a third time in a row, 3 meetings, 3 rate cuts, although everybody was thinking that this is not the beginning of a cycle of rate cuts, it's only something that's going to happen once or maybe twice. Now everybody knows that it already happened 3 times, and who knows, maybe a 4th is coming. A lot of analysts believe that the Fed tries to avoid making important decisions in presidential election years. And of course, we have the US presidential elections in 2020. So next year, what a lot of people believe, at least after the very early part of the year, the Fed is not going to do anything unless it really he really has to. So maybe we have a room for a fourth rate cut, and that's it. That's what some analysts believe in, people who follow the Fed. But of course, we cannot tell in advance until we get these meetings and the decisions that the Fed will take. But what we can do is we can go to the chart and analyze the market together and see what chances do we have of moving to the upside or to the downside. So guys, one of the most important things I want you to note here is on the last day of last month, which was Thursday, we broke above both the moving average band and the falling trend line that appears on the chart. It's the falling trend line for September 5th. It's the blue trend line here. We broke above them both and we closed above them, which is fantastic for the bulls. However, Friday was not a super day for gold. Yeah, we dropped, we turned up again. We closed around the place that we opened at, not like on Thursday when we opened very close to the low, closed very close to the high. That was very strong. So what now? This is the most important thing. For that, I will turn to the, or first of all, before talking about the short term, what I want to see is how the month closed and how the week closed. October closed on gains, of course, negating or refusing to drop as September indicated, and this is a sign of strength, of course. After having a candle like this, the price should have dropped. But you know, the gold is well supported by the Fed, by the monetary policy that is currently in place, and that is why it will be very hard to see very huge drops on gold, and that is what October candle is showing us here. You can look at this candle, no drop. We are moving higher in October in spite of what looked like a bearish candle in September. But it is not a pattern, you know, this is not a pattern that we can count on. It's not one of the candle patterns that mean something. What about the weekly? Let's look at the weekly, guys. On the weekly chart, we also have a close above the same trend line. Not really above it, but it is good enough. It's good enough, yeah, it is good. And this, of course, is another sign of strength. However, we have been rising for 3 weeks straight, so some kind of correction